are again meeting with we are meeting again with one more sessions that too on our virtual platform, JB Nagar CP Study Circle of the ICI WRC. Today we have with us the eminent speaker, CA Sushrut Chitale sir. So this is his home ground. So I think introduction is not required. But before we formally introduce our today's speaker and our Republic Day, 73rd Republic Day, it is also very close now. So before we ever start our today's sessions, I would like to wish all the members in advance the 73rd Republic Day also. Now, I would like to take this opportunity to introduce the today's speaker, CA Sushrut Chitale sir. So since this is his home ground, again, I would like to say the introduction is not required, but then too, as a matter of formality, I would like to read his profile in very brief manner. So CA Sushrut Chitale sir is the qualified fellow chartered accountant. He is the partner in a leading CA firm at Mumbai. Professionally and the socially positions what we held. So Sushrut sir is the elected member of the Western India Regional Council of the Institute of Chartered Accountants of India, which is the 5th largest regional council of the Institute of Chartered Accountants India, catering the 1 lakh and more chartered accountants into practice and more than 2,50,000 chartered accountants, student chartered accountants across the Maharashtra, Goa, and Gujarat. He is the member of the Accounting and Auditing Committee of the Bombay Chartered Accountants Society. He is worked as a member of the Banking and Finance Committee of the Indian Merchant Chambers. Is a member of the Corporate Law and the Corporate Governance Committee of the Institute of Chartered Accountants of India. And is a member of the Family Business Entrepreneurship Council of the Maharashtra Chamber of Commerce, Industries and Agriculture. Sushrut sir is also appointed as independent directors in 2 of the leading companies. So normally regarding his qualification and regarding his academical achievements, I would like to say normally when we write any numbers or lines, we normally write the bullets 1, 2, 3, 4 kind of thing. But now I'm just referring his profile. I can see instead of numbering, there is the rank, what he has scored while his academical career. So I would like to read few of the achievements academically. He is the 11th rank holder in Mumbai on HSC exams. He is the 29th All India rank holder in the CA final examinations, 26th rank holder in All India level in the intermediate CA examinations, 2nd rank holder in All India level and ICWA final examinations, and 10th rank holder at All India level in ICWA foundation examinations. So his academic achievements, the list is very long, but today to start with these sessions, I am just cut shorting my today's reading. So Sushrut sir, with these brief introductions, we are welcoming you on behalf of JB Nagar CP Study Circle of WRC of ICA and all the members and all the participants. Thank you very much, sir, for giving your valuable time and taking these efforts. So welcome you on very important topic, forensic audit and the future opportunities for the professionals. So thank you very much, and with a round applause, we are welcoming you, sir, on behalf of all the members. Now, sir, you can start the session.
Sure. So thank you so much, Jayesh Thakkar sir. Thank you to the conveners and all coordinators of JB Nagar Study Circle for giving me this wonderful opportunity. I think more than thanking me, I think I should thank all of you for being present here on a Sunday morning. And maybe we will all deliberate on this particular topic. The way in which I have tried to structure this session, maybe over the next 1 hour, 20 minutes or so, I will try and cover my presentation. In the meanwhile, if there are any questions, I think we will take the questions at the end. So whatever questions are there, we can have a discussion on that, any views that people might have. And I think thereafter we will conclude the session. So I will first start with sharing the screen. I hope you are able to see the screen. So I think the topic that I am going to cover today is forensic audit opportunities for the future. Now there are 2 parts to it. One is the concept of forensic audit, and second is opportunities for the future. I think both are equally important to be discussed. The first part, naturally, forensic audit. Now, this is a topic which I think different people will speak at different points of time. Uh, this is like an elephant, and I think so from that perspective, everyone will have their own perspective about this whole aspect of forensic audit. For the simple reason that as of today, the profession within the whole gamut of forensic audit has not really grown to an extent that there has been a large level of standardization. And accordingly, I think different people will have different perspectives about what do they mean by forensic audit. Uh, Secondly, I think there are two ways in which I could have done this session. One is to try and show how much I know and try and throw a lot of terms at you, cryptography, steganography, and this and that. At the end of it, many people will start feeling, अरे ये बहुत उसको बहुत आता है, but हमको क्या मिला, हमको कुछ नहीं मिला. So I think I would rather not go into that angle. I would rather say, कि, okay, we will discuss it from a practical angle of what people actually do when they say they do forensic audit. So that if tomorrow, if there is an opportunity, there is an assignment that would come our way, there is at least some way to start. Otherwise, I mean, it's always like a mirage in terms of what, I mean, the name is big, but I don't know really what to do about it. So I think from that perspective, we will approach this whole thing. The first word itself about what is forensic audit. Now, forensic audit, I think itself is nowadays becoming more of a misnomer. Now, it is like what we colloquially call as forensic audit. Now, if you look at the institute, in fact, institute has come out with standards which are called forensic accounting and investigation standards. So, institute has issued a series of standards which are available on the website, not yet completely made applicable or mandatory in that sense. But I think these are the standards which are approved by the council and which will be made mandatory at an appropriate period of time. The interesting thing in that is there is no use of the word forensic audit. So it is broken up into two parts, forensic accounting and forensic investigation, or forensic accounting and investigation. And I think fundamentally, yes, we can go into the technicality of it, but from a market perspective, or frankly, from the point of view of regulators also, and I think one of the biggest regulators or two biggest regulators which effectively are important as far as this arena is concerned. One is the RBI and second is the uh, under the IBC. So I think both cases, colloquially or even in appointment letters, it is very clearly called that you are appointed to do a forensic audit. So I think when we use the forensic audit, we will really use it in that perspective. As far as the institute is concerned, like I said, it is essentially that it is called a forensic accounting and investigation standard. Fundamentally, there is no specific definition of the word forensic audit itself. And that's why, like I said, different people will naturally have different perspectives about what do they mean by the whole definition of forensic audit. But in common parlance, fundamentally, it is the gathering of evidence to establish any wrongdoing or fraud. So I think from an auditing perspective or from the existing standards before the forensic accounting standards came in, if a chartered accountancy firm was supposed to do it, it could be called as something which would fit within what is called as agreed upon procedures, which was the auditing standard which has been in prevalence for a long period of time. Because essentially, when we do a forensic audit, there is a set of steps or a set of scope which is agreed between the client and the forensic auditor or the accountant or the CA firm. And that is something which needs to be really undertaken. So I think in a common parlance, it is the gathering of evidence to establish any wrongdoing or fraud, which is what forensic audit is. Naturally, it is most commonly used in the detection of fraud. And I think we will go to the next slide where we will discuss the whole concept of fraud, because I think fraud has been in existence since human beings have been in existence. Frauds have naturally increased with the proliferation and increase in business and any kind of economic activity. And I think frauds is one thing which will definitely continue till the time business continues. So from that point of view, I think forensic audit also has got a great opportunity going forward. Now, naturally, some of the seniors would feel that, okay, why is it suddenly becoming important? So I think what has happened is over a period of time, whatever you used to call as investigations or agreed upon procedures in the past has now been over a period of time sort of been clubbed into a word which is called as forensic audit. So it's not that this concept or the whole thing that we do under forensic audit is entirely new. But I think now it has got a definite name and now it has got a definite function under which things will work. Just to give a snapshot about the kind of issue that we are dealing with. So, I mean, I tried to analyze, and this is always a wonderful publication to read through. The RBI's report on trend and progress of banking in India. This is the annual publication of the Reserve Bank. So if we look at these numbers, the frauds in the banking sector, now these are bank frauds on the advances. So I mean, bank frauds can happen to a large extent uh, in terms of both value and volume. If we look at from a value perspective, advances dependent frauds. So I mean, frauds in the nature of money given to people and which did not come back, which was misappropriated, which was laundered. I think that is around 1,37,000 crores in FY 2021, and which is practically 98 or 99% of the total value of bank frauds. So while there is a lot of discussion in terms of credit card frauds, this fraud, LC, foreign exchange, or all these, fundamentally from a value perspective, I think it is still advances which constitute a major portion of frauds in the banking system. And I think this amount itself, now this is the amount which is reported by the banks in FY 2021. So it is not necessary that these are frauds which have happened in 2021. Honestly, frauds which have actually happened in 2021, the whole way in which the process works, it might take almost at least 3 to 4 years before that they are actually reported to the RBI. And I think from that perspective, this number we need to look at from that context, that these are not frauds which have happened in 2021, but these are reported by the banks to the RBI in 2021. And these amounts, if you see, these are huge amounts. I mean, the total tax collection for the government of India is around 25 lakh crores. And 1,37,000 crores is the value of frauds which are reported for a particular year in as far as the banks is concerned. Now, this, like I said, constitute almost 99% frauds by the value. At the same point of time, this is more advanced based frauds in public sector banks. So if you look at the composition, this is a typicality that if you look at the composition, and RBI has not really prescribed the exact percentages, but it is very clear that more advanced based frauds are there in public sector banks, and more credit card and internet oriented transaction frauds are there as far as private sector banks are concerned. So I think we come to the main thing about what is exactly a fraud. And I think this is where the thing starts becoming a bit interesting, because there are various definitions of the word fraud itself. So I have tried to list down some of them. One is the explanation to section 447, which is punishment for fraud under the Companies Act. There is also the major master circular on fraud classification and reporting, which is issued by the RBI. And I think this is the main circular under which most banks will eventually appoint forensic auditors. And the reference to this circular is also required in terms of the forensic auditors sort of trying to determine, because I think IBA has now made things a bit complicated by requiring all forensic auditors to state conclusively whether there is a fraud or not, and which is where there is always a fight between the banks as well as, I mean, between the banks and the forensic auditors. Then there is a report of the RBI Working Group on Information Security, Electronic Banking, Technology, Risk Management, and Cyber Frauds. There is an explanation to Section 45 of the Insurance Act. Then there is a CPC and the CRPC and the IPC, which does not exactly define fraud, but tries to define the word fraudulently. Then there is Section 17 of the Indian Contract Act. And then we have our own ICAI trying to define it in Section 240, SA 240, which is auditors' responsibilities relating to fraud in audit of financial statements. Now, the point that I'm trying to give all these things is that the definition in each of these is a bit different. And accordingly, when you are actually appointed, who appoints you and what is the context and what is the purpose will also determine to a large extent what you exactly do in terms of a forensic audit. Because eventually, if you are asked to identify a fraud under the Insurance Act, you need to look at the relevant definition under the Insurance Act, and maybe obviously sometimes under the Companies Act, because all insurance companies are essentially companies. At the same point of time, if it is for a very different purpose, say under the CPC, CRPC, IPC, then the relevant definitions under CRPC would be relevant, and at that point of time, the definition under the Companies Act would not be relevant. So I think that was really the context which I wanted to set in terms of saying that these are definitive different acts, laws under which the definition of fraud is different. Quickly, I think I will not go too much into it, but if you look at the definition of fraud under Companies Act, It says that fraud in relation to affairs of a company or any body corporate includes any act, any omission, any concealment of a fact or abuse of a position committed by any person or any other person with the connivance in any manner, either with the intent to deceive or to gain undue advantage or to injure the interest of the company, shareholders, creditors, and whether or not there is a wrongful gain or a wrongful loss. Now, the only reason why I would say I'll spend a few moments on this is because if you see and if you try and look at each of these words in the definition, you will understand that the expanse is so large that practically a lot of things can actually be called fraud as far as the Companies Act is concerned. Secondly, if you look at the timeline in terms of the definitions, Companies Act fraud definition seems to be one of the most comprehensive and I would say expansive definition as far as the word fraud is concerned. And it is logical because this is one of the most recent acts. So Companies Act came in 2013. Most of the acts are actually way before that. And accordingly, with the changing circumstances and time, the word fraud has been defined way more comprehensively as far as Companies Act is concerned. And I think that is where I think many things go under SFIO, and that is how they try and prosecute people under the Companies Act. As far as Reserve Bank of India is concerned, interestingly, Reserve Bank does not per se define the word fraud anywhere at all. I mean, at least to my knowledge. What it only says as far as this, the circular is concerned on this fraud classification and reporting, it says that based mainly on the provisions of the Indian Penal Code, there are 4 or 5 or 7 types of frauds, essentially 6 types of frauds that they only note in the circular. So first is misappropriation and criminal breach of trust, fraudulent encashment to forge instruments, manipulation of books of accounts or through fictitious accounts and conversion of property, unauthorized credit facilities, negligence and cash shortages, cheating and forgery, irregularity in foreign exchange transactions, and any other type of fraud. Now, if you see this, especially points 3, 4, 5, and 6, they are very specific. They are very specific. And accordingly, when you actually undertake a forensic audit on behalf of a bank, in most NPA cases, many cases, this 3, 4, 5, 6 would actually not be applicable because it is a very specific type of situation only where this can be made applicable. Cheating and forgery, yes, you have to also prove intent. And as a forensic auditor, trying to get an intent into the forensic audit report is actually very difficult. So most cases, if you see, would really fall into case type 1 and type 2, which is misappropriation and criminal breach of trust. That is, maybe the bank gave you money for a particular purpose and you actually decided not to use it but for something else. And that is where there could be a breach of trust, or there is a misappropriation, or there is some kind of manipulation of the books of accounts. There is something which is a fault as far as the accounting is concerned, because of which there is a conversion of property through which maybe money has gone somewhere else. So I think from a interpretation or somewhere, I would say convergence as far as the legal and the forensic audit perspective, these first 2 points are some things which are mostly applicable when any forensic audit is actually undertaken on behalf of a bank. Going to the types of frauds, I think fundamentally there are 3 broader types of frauds. One is what we call as misappropriation of property. Second is what is called as a position-based frauds, because you are in a particular position and you can sort of manipulate that position. And third is what is financial statement frauds. So as far as asset misappropriation frauds are concerned, I think we will just go through them. One of the major items I think which we have learned right at the beginning is scheming, which is about stealing cash before accounting it in the books of accounts. So you don't really account for the transaction at all. Just maybe there is a sale at a counter, you don't account for it, you just pocket the cash. Second is cash larceny, where you actually account cash in books as receipt and then remove it from the for your personal use. So this is what we have learned earlier, what we typically called as steaming and lading. Fake bills, I mean, this could be both for purchases as well as sales. Typically, when it is done for purchases, it is sort of to take cash out of the system. Fake bills done for the purpose of sales is sort of getting cash into the system and converting into maybe an accountable or accounted properly in the books. Ghost employees, we have known this in the past where some companies have actually shown ghost employees, and accordingly a lot of money is in a way paid to them, and then there could be a certain way by which those are taken out in a particular manner. Expense reimbursement schemes, I think all of us are auditors, so we know this, we would have seen it at many points of time. This would involve either booking completely fictitious expenses, or sometimes it is booking expenses in such a manner that maybe you manipulate uh, the levels at which people, especially this could happen in larger organizations, where if, for example, if a person has a ability to sanction something up to maybe 1 lakh, then if a larger expenditure is made, it is broken up into various heads so that that expenditure is always reimbursed, and there are things like that which are done. Inventory misuse is again something which is, I would say, a typical kind of a fraud, where there is some kind of a misuse of the entire inventory. There could be inventory which is not there in the books, but which is accounted, and it could be the other way around also. As far as position-based frauds are concerned, I think a common thing is obviously bribery, which is covered by the Prevention of Corruption Act, and there are various other laws both in many countries. Certain laws of maybe US or even UK, Foreign Corrupt Practices Act, UK Bribery Act, those become applicable not only to their country, but sometimes they also make it applicable to their corporations or their subsidiaries of those US or UK based companies which apply, which in a way work across the world. And to that extent, I think sometimes this becomes important for us to even study that. Even the Prevention of Corruption Act per se, it is important to always read through. And I think bribery is a natural, very obvious kind of a fraud. Kickbacks, again, to chartered accountants, I don't need to explain kickbacks, but essentially where there is some kind of an arrangement where the purchaser in a way gives a higher amount to the seller, and then some part of that money in a way comes back or is paid as a kickback or some kind of a gratification, or money for certain gratification for a different purpose. Bid rigging is also a classification under the whole bucket of position-based frauds, because this typically would happen in terms of knowing what is the bid amount for certain other bidders. It would also be in the nature of trying to manipulate the pre-qualifying criteria in terms of having certain kinds of tenders. And accordingly, I think that is bid rigging, that is a part. Money laundering, again, I think money laundering is a larger canvas, and we will in a way cover it on the next slide. But I think money laundering is itself a very big uh, area. And I think now in most newspapers, every day, for whatever happens, we always see the ED getting into the picture to try and look at the money laundering angle as far as the whole thing is concerned. Because I think in today's context, the whole game is about economic resources. And accordingly, finally, whatever crime or whatever is done, there is always going to be an element of money involved where the entire thing is channelized. As far as financial statements frauds are concerned, some of the aspects are maybe fictitious revenues booking, wherein there is no revenue, but you sort of actually account for it. Now, this could be typically done by companies where they would really need to increase their revenues. This naturally is a very natural, I would say, natural as in this would be a typical thing which would maybe sometimes be done by listed companies to show higher revenues, because as far as the stock market is concerned, we typically tend to track what is the revenue growth, and that is sometimes reflected as far as the price is concerned. So fictitious revenue booking is a possible, I would say, driver for certain listed companies to maybe manipulate their stock price. Non-provision of losses, which is the other way around, where you do not provide losses, and that is how you show higher uh, profitability. Again, typically would be a thing which is done by listed companies. The other way would be somewhere where the company is unlisted, where you try to show a lot of costs so that your tax profits are reduced, and accordingly you show lower profitability. Incorrect asset valuations, I think with the advent of Ind AS, asset valuations sometimes would also make a major difference in terms of both profitability as well as balance sheet. And accordingly, there could be incorrect asset valuations of certain maybe items of assets and liabilities sitting in the books, which can to a large extent shift the net worth as well as profitability. I think siphoning of bank loans, again, more a financial statement fraud in the sense that sometimes the asset seems to be on the books, but in reality, it is not there. So I think from that perspective, it is put here. Shifting of profits to shell companies, I think again, the whole concept of maybe transfer pricing or the whole concept of trying to move profits from one company to another company, from one jurisdiction to another jurisdiction through certain kinds of purchases, sales, or certain types of expenses or receipts or incomes which are shown. As far as financial statements of frauds are concerned, certain other things are, I mean, inflating sales. So dummy sales would come. There could be possibility of dummy sales in terms of high C sales or circular transactions, where on the high C, based on certain documents, sales are just shown, and per se only the paper just keeps on moving, and that is how the transaction is in a way shown. I mean, obviously not all high C sales are actually frauds, but this is a possibility in terms of showing dummy sales, where only there could be circular transactions, A sales to B, B sales to C, C sales to A, and that's how all of them keep on maybe manipulating and increasing their revenue. So it's not necessary that all high C sales are actually dummy sales, but this could be a transaction, or this could be something which many companies might use to sort of jack up their entire revenue. Sale and leaseback transactions, again, I think per se it doesn't mean that it's a fraud, but in certain assets there is a concept of selling. So if I buy a particular aircraft, typically I would might be sell it to a particular financer and then lease it back. Now this is essentially a financing transaction, and what could happen is I can maybe sell an asset for 100 rupees, or I can sell the same asset for 200 rupees. Because it's being a financing transaction, then what I pay in terms of lease rentals later on will be determined at the price at which I actually sell. But today I would end up accounting for it as a complete profit on sale of asset. And I think that is where maybe there is a possibility that there could be maybe advancement, or I would say there is a front ending in terms of profitability. So I think that's something that as auditors also, and while doing forensic audit also, we need to be careful about. Year-end sales, I think typical thing about cutoffs and trying to move profits from one year to another year. Uh, this could be sometimes errors, but there could also be sometimes things which are done which are not really backed by any commercial transaction. And accordingly, I think that could be one of the ways of sort of inflating sales. Sale on return basis, again, I think in certain industries we see it as common, where actually the sale happens only when on paper it is shown as a sale, but in reality the commercial understanding between the two parties is where the wholesaler might sell to a retailer, and the money is payable only when in a way actually the retailer sells it to the ultimate consumer. And I think from that point of view, there is a difference between the spirit of the transaction or the substance of the transaction versus what is written as far as the agreement is concerned. And I think this is again something that you need to be very careful, both as an auditor as well as at the same point of time as a forensic auditor, to exactly understand whether this money or this sale is a genuine sale or not. From a funds movement perspective, loans or advances to related, unrelated companies. Now, I think over a period of time, both Companies Act or RBI, as well as even recently SEBI, they have kept on tightening what is exactly a related party, but there are still obviously certain transactions with companies which are actually related, which are actually controlled, but which do not fit within any of the definitions of a related party. Now, typically loans and advances to such kind of related, unrelated companies is always a definite source, and which needs to be looked at when doing any kind of a forensic audit, because that will be the fundamental place where in most cases money would essentially try to be uh, given out. Purchases or sales to overseas affiliated entities, I think this is obvious. If there is an intention to move money out, then there is a possibility of overstating purchases. If there is a indication or inclination to move money back into the company, there could be a possibility of overstating sales. Now, obviously, with transfer pricing, this needs to be also justified in different ways by the companies. But yes, I mean, having said all of that, there are companies who can still keep on doing a lot of funds movement as far as this is concerned. Loans against pledge of shares in case of listed companies, again, I think this is exactly not really a fraud. But what happens in many cases, and now obviously there are disclosures in this required, that it could be possible that the promoters which hold a particular stake actually pledge their shares in the listed companies, take money against it, and then basically use the money for certain purposes, effectively with the rest of the market not even knowing that somebody owning a major portion of the shares is in a way actually indirectly, they might just one fine day tell the bankers or whoever has the pledge to just take the shares. So I think that is how this can in a way be manipulated and has been done in the past. The whole concept of money laundering, I think, is going to be very critical, and going forward, this is going to be a major focus area for the government. And I think we as professionals, we need to also understand the whole concept of money laundering and maybe understand the PMLA Act in more detail. Money laundering fundamentally has three aspects, which is placement, layering, and integration. From an Indian perspective, I think money laundering, the whole main part of it is what is called as proceeds of crime. So there are certain notified crimes which are per se written in the PMLA or the schedules to the PMLA. And if any of that is there, then whatever is a proceed of that particular crime is also called as laundered money, and there can be obviously penalties and prosecutions with respect to that. So what is important to understand, frankly, as forensic auditors, is that there could be certain words that we use very generally or colloquially, but from a legal perspective, using those words has got very, very specific meaning. So I think money laundering fundamentally is what? It is about structuring. One is about breaking cash into smaller deposits to avoid suspicion and reporting. In most cases of money laundering, the starting point could be cash. In certain cases, it is also possible that the starting point itself is funds in banks, which is actually masked in various ways, and then it comes back into the system in a different name. But more often than not, I think even today, still, the starting point is sometimes cash. Now here there can be an interesting definition, and I'm in an interesting discussion, and I am not maybe the legal expert in that. But when we talk of money laundering, I think we need to differentiate between money laundering and unpaid tax money. So something money which is not taxed is not necessarily money laundering, and vice versa. So something which is money laundering may not necessarily be something which is not taxed. It is very much possible that amounts which are completely taxed, assessed as proper, completely tax paid, assessee is given a complete clean sheet, might still be money laundering at the end of the day, because it talks about proceeds of a particular crime which has happened at some point of time in the past. So we need to understand that these two are different things and accordingly approach this. So cash is, when we say cash, cash is broken in smaller deposits to avoid suspicion and reporting. This is then smuggled and deposited in jurisdictions with banking secrecy and lesser oversight. Now, over a period of time, naturally, this has reduced. So, I mean, if some maybe jurisdictions like Switzerland, which per se you can deposit any amount of cash and nobody will ask you a question or even withdraw any amount of cash. Now things are changing, because if today a country like India demands that information, Switzerland earlier would talk about its banking secrecy laws, but now I think with the changing world situation, Switzerland is more than willing to give all that data to countries like India and other countries in the world. But I think this is still one of the major parts of how this is maybe done. Naturally, this is, I mean, most cash intensive businesses where there is a lot of possibility of cash being generated as far as the revenues are concerned, be it hotels, restaurants, retail stores, casinos, petrol pumps. These are all used to typically do the first part as far as the placement in the system is concerned. Then over a period of time, it is layered and then it comes back and it's integrated into the formal economy. Trade over invoicing, I think this we have just discussed on the earlier slide, is about moving money out of the country, under invoicing sales to related parties based in foreign jurisdiction, which would effectively mean that you're shifting profits from one country to the another country. Then there are shell companies or coca companies, and which is where typically these are used to route funds. Now, interestingly, the whole concept of shell or coca is what I think we use in common parlance. Legally, there is no definition of the word shell company, because even MCA in a way in between started this whole concept about shell companies. But at least I could not find out any definition of the word shell company per se. So I think this is used in a general context about companies which don't seem to have any business per se, but where a lot of funds in a way keep on moving in and out of such companies. So I think more or less these are what we can loosely call as shell companies, but or coca companies, but there is really no definition around that. I think round tripping, which is a common thing that we have heard of as far as the tax laws are concerned, the same thing also from a money laundering or from another perspective is done, where possibly money is shifted outside the country, where there is deposits which happen in a bank account in a tax haven. Then there is it is routed through various countries. and the same money could enter the enter India or any such country where it needs to go as a FDI. So it is the Indian money or it is the country's money which is actually routed across, and then it comes back into the same country as a FDI. Well, there is also theoretically one more thing, and which in one of the cases, not exactly, but to a large extent, it is possible, and to some extent I have seen, is that there could be a concept of a bank capture as far as using a tool of money laundering is concerned, where the people who deposit money in the bank, now this could be sometimes money which is generated by Ponzi schemes. And I think this is where maybe we also as chartered accountants have a big role to tell people whom are our clients or generally people around us to be very, I would say, careful about investing in what are called as collective investment schemes, which in reality are only Ponzi schemes. And because that is where many people, even today, a lot of educated people, frankly speaking, a lot of doctors still continue to invest good quantum of money as far as these schemes are concerned. And basically, this is huge quantums of money. So there could be a possibility where this entire money which is generated, somebody which has got a good control of maybe a lot of money, in a way tries to invest or tries to show it as a deposit in a bank which is not really that strong. So mostly it could be a cooperative bank. Accordingly, with so much money suddenly coming to the bank's financials seem to get strong. Accordingly, the person in a way tries to get an outsized influence in terms of having a say in how the bank functions, may have even certain people of his or maybe controlled by that person getting onto the board or the shareholders or the essentially the board of that particular bank. And thereafter, then the same money effectively is used or given as loans to some people who are, I mean, anyway, unconnected. But using a bank as a filter in between sometimes could help such kind of a people to frankly break the link between the source of money and the application of the money. And I think that is where maybe at some point of time in the future, there will be a large amount of NPA because the money was never supposed to be back. And accordingly, the loans turn into an NPA and the bank might collapse. Now, the bank might collapse in the sense the bank was always supposed to collapse. That was the plan. But I think this is where the bank essentially is used as a tool in between to make sure that there is very, very less possibility of a linkage between the source and the application of money. But I think this is something which maybe very, very big or smart or I would say dangerous money launderers might use as a system to sort of move money across the system. As far as the whole concept of money laundering is concerned, I think FIU, which is the Financial Intelligence Unit, has got a big role because there are detailed rules about what is to be done by various banks or various intermediaries to ensure that the whole concept of money laundering is actually nipped in the bud and there should be as less possibilities as possible. So if you look at the key statistics, there are around 5.4 lakh STRs. Now, typically any intermediary, a bank or any financial intermediary has to file two things regularly. One is a cash transaction report, wherein for any deposit more than 10 lakh rupees or within a particular month, if a series of cash deposits crosses 10 lakh rupees, then the bank needs to file a cash transaction report to the FIU, Financial Intelligence Unit. Similarly, if there are any suspicious transactions, now what are suspicious transactions are also indicated, but obviously it can never be comprehensively defined. But some of the common things are, for example, if there is a cash deposited and an immediate demand draft which is received, or things like that, then a suspicious transaction report needs to be issued by the particular bank or it has to be filed by the bank with the FIU. Now, if you see at the numbers here, 5.4 lakh STRs, 1.54 crore CTRs, the sheer quantum is such that it might sometimes be very difficult for the FIU to really analyze it and take any action on it. But I think this is just the extent to which various kind of filings are happening in an Indian context. And I think this is also what in a way highlights the whole problem per se and the whole, I would say, extent of the way in which things are. FIU in its reports interestingly says that detection of unaccounted income of rupees 1,860 crores was in a way done by FIU by passing on this information to the income tax department. I think this is another trend which is a very good trend and which we as professionals need to know that over a period, most government systems at the back end have started talking to each other, have started being connected, and accordingly information is passing very freely and in a comprehensive and a proper manner in the government across various departments. And I think that will definitely help the government to both increase tax collection and at the same point of time try and highlight various problems across various regulators in a opportunate and in a very quick time. So how much does fraud really cost? I mean, we have been talking so much about the types of frauds. What do we do now? We will come to the whole concept of forensic audit, because fundamentally forensic audit is about understanding all of this and trying to really unearth that. I think that is essentially in a nutshell what a forensic audit actually is. So we need to really understand what fraud is, because only then we can understand or we can know what to really do. So how much does fraud really cost? Now, this is what I've taken from the survey of the nation, which is a ACFE, Association of Certified Fraud Engineers annual publication. Now, here, if we say we try to understand the whole concept of forensic audit, or whole concept of fraud into three broad heads, which is asset misappropriation, corruption or position-based frauds, and financial statement frauds. So in terms of the quantum or the volume, the highest possibility is in terms of asset misappropriation. Why? Because these are typically done at a retail as in at a level where there is some kind of delegation. So that is where these kind of frauds would happen. These might typically happen at a maybe in a mall at a particular stall. I think where there is a person who is doing it, there's some scheming, cash larceny, some kind of inventory misuse. That is where it can happen. So while the volumes are high, the value per se doesn't seem to be too high. But if you look at the financial statements fraud per se, who can undertake these financial statements frauds actually can be undertaken only by the people in power, only by those who have the position or who are interested with the trust of ensuring that financial statements are proper. So I think these are frauds which typically happen at the highest levels. So while in volume terms it will be less, the value impact of financial statement frauds is always going to be phenomenal. So I think from a perspective, this is something that is always important to understand. Now, the next slide is also interesting because it says that how are frauds actually detected? Because see, in the whole cycle, there could be a fraud which actually happens. And then there is at some point of time, some forensic auditor actually getting appointed to understand what has happened. Now, it is sometimes also possible that the management or the regulator feels that there could be a problem, but the problem is not identified. But at least in 7 out of 10 times, the fraud is also identified. About what is it that seems to have happened is identified. And if you look at this, close to 50%, I mean 43% of frauds are actually detected by whistleblowers using various means like fraud hotline, emails, or through unsigned letters sent through post. So I think which is a very interesting number, that half of the frauds almost are actually highlighted by a whistleblower who might in a way go and tell the management or the regulator that this is the problem, this is something which has actually happened, and thereafter it becomes, frankly speaking, a bit easy for both the regulator as well as the forensic auditor to go and check whether that is something which has happened. Otherwise, I think it is like a drop in the ocean and trying to check by itself whether a fraud has happened or not. Yes, movement of funds is one part of it, but otherwise trying to check any other kind of fraud is a very difficult context. Now, interestingly, when we say whistleblowers, it could also involve people who were actually a part of the fraud themselves, but who have not been given the spoils. That is one. Or it could also be really good meaning people who have really care for the organization or who care for a general sense for the country and who actually highlight it to the regulator at some point of time. Other than that, internal audit and management review. I think this is also depends on the kind of controls that are placed in the organization by the relevant bank or by the relevant organization or company. I think that can to a large extent also identify frauds. This is again based on a report of the ACFE, but what they try to say is that contrary to general belief, frauds may be affecting even private companies more than government and public companies. Now, both ways to look at it. Sometimes in public companies, what happens is because of the preponderance of the Prevention of Corruption Act, which is applicable to all employees. If it is a government company, which is central government, then the CBI typically looks at these aspects. If it is a state government thing, then the local anti-corruption bureaus in a way handle this aspect. In case of private companies per se by itself, I mean, legally, I'm not a great person to comment, but per se, this law or this PCA per se doesn't become directly applicable. And accordingly, there is a possibility that other than the organization per se trying to complain under some other provisions of the IPC, this thing from a legal perspective would typically not be caught. And I think that is where this kind of a survey throws the insight that maybe frauds may be affecting private companies more than government and public companies, because in public companies, in addition to the Prevention of Corruption Act and maybe a Anti-Corruption Bureau or CBI being involved, there is also a lot of regulation around the CVC, the Central Vigilance Commission, which is also there. So maybe I think that could also be one of the reasons for the same. When we look at forensic audit, and now we will come to actually all this time we have in a way been discussing about the word fraud. And the only reason why I took this much time on the word fraud and the different types of frauds is because what is a forensic audit finally? Like we decided or like we discussed right at the beginning, forensic audit is the whole concept of trying to unearth the fraud or trying to find out evidence to find out what has exactly happened. And from that perspective, if you know what are the different ways in which people can undertake a fraud, or what are the ways where things can go wrong, as a forensic auditor, I think it is much easier to build a hypothesis and try and test if that is happening. So I think forensic audit, essentially all of us being chartered accountants have got enough common sense that if we know what is it that could have happened, then we logically on a common sense perspective also we are well equipped to exactly go to the root of it and find out whether it has happened or not. But what is important is to also understand from a forensic audit versus statutory audit perspective. And this is typically what happens, especially in the early stages or in certain earlier or initial assignments that we do, that we sometimes tend to focus too much on disclosures, too much on the reconciliations between tax and accounting, to rather than focusing on where exactly the money has gone. So as far as the difference is concerned, I think fundamentally in a statutory audit, our role is only to express an opinion as to true and fair. We are only saying whether the accounts are fair or not. Whereas in forensic audit, per se, we will not be commenting on the books of accounts at all. Our specific purpose, or we are always appointed for a specific purpose assignment to identify and uncover any wrongdoing. So if there is a wrongdoing, we just need to identify adequate evidence, adequate facts around it to say whether it has actually happened or not. So from a mindset perspective, when we do statutory audit, it is always based on a mindset that we trust, but we are verifying. But in a forensic audit, per se, you are there because somebody feels that there is a problem. So I think you have to presuppose a wrongdoing and actually attend and maybe look at even evidence from a perspective that the evidence is also concocted or manufactured to support something so that it is not caught. So I think from a mindset perspective, that is something which is very important to keep at the back of the mind. Having that perspective in a statutory audit is very difficult because then you will not trust anything at all. So I think there is a fundamental difference between the mindset when you do a forensic audit versus a statutory audit. As far as techniques are concerned, I think these techniques in a statutory audit perspective are both substantive and compliance, but essentially it is sample based. Whereas in case of forensic audit, it is investigative. So again, you go with a mindset that things are wrong. It is substantive, or many a times it is in-depth, because when you, like I said, if half the frauds are actually highlighted by whistleblowers, many a times when you do a forensic audit, and if it is appointed on behalf of a particular company, you are also told that you please look at this particular aspect, because this is where there is an allegation that something wrong has happened. So you don't really start looking at the entire books of account. You might look at a particular area, particular location, division, set of people, or a particular area which is defined to you, to go in depth into it to see if there is genuinely a problem. As far as verification of items of financial statements are concerned, in a statutory audit, you would rely on the management certificate or the management representation. So obviously we will carry out on all tests. But in case of forensic audit, there is obviously going to be an independent verification of the suspected or selected items where misappropriation is suspected. So you can't really rely on what the management is saying in a forensic audit, because you are appointed only because the management or some third party does not believe the management. So I think that is again where the mindset comes into picture. In case of off-balance sheet items, the focus is on identification and disclosure. So in a statutory audit, another important thing is we typically don't get into the propriety aspects of things. So whether some transaction should have been done or not, unless it is, we will definitely look at the legal part of it, especially from now with NOCLAR being implemented. Legal aspects we have to cover, but propriety aspects, like for example, how the CAG does. Now, CAG would not only go into whether it was legal or not. CAG would also comment, if you see the reports, they would also comment on whether it should have been done or not. Now, that is something which typically or normally we never do as a part of statutory audit. If there is a business transaction and if it is seems to be genuine and backed by documentation and is disclosed, I think our job is done. But in case of forensic audit, we actually tend to focus on propriety and impact, stating what was supposed to be done, effectively what has happened, has effectively, while all the documentation being in perfect shape, has it resulted into a situation where money has seems to be have completely been siphoned off. So I think that's something that we need to focus in terms of off-balance sheet items. And if we have an adverse opinion in the statutory audit, naturally we just give a negative. So we will give a modified opinion, to use a technical word, or basically we give a disclaimer of opinion. But I think that's where we stop. But in case of a forensic audit, there is a legal determination of the fraud and identification of perpetrators depending on the scope. So depending on the scope, sometimes we have to just define whether it's a fraud. In certain cases, regulatory agencies or even banks or maybe whoever has appointed you might even ask you to find out who has done it. And accordingly, depending on the scope, you need to really take it to its logical end. And we will also cover that later on, whether that you need to also gather evidence to make sure that it stands in a court of law. So what are the different types of forensic audit assignments which are typically done today? So one is where frauds are carried out by employees against their own organizations. Now, this is where maybe an organization believes that a particular employee has been making money on the side, has been corrupt, or has really done something which is not correct, in which case the organization typically would appoint a forensic auditor to do the forensic audit. The big advantage in this kind of forensic audit is where, because the organization itself is appointing the forensic auditor, the forensic auditor would get access to the employees typically laptop. Many organizations which are large also have facilities to remotely monitor the laptops or whatever goes in and outside, especially from an email perspective or even from the data perspective. Or else, I mean, the employee is duty bound to hand over the laptop and sometimes even the mobile phone to the employer to be able to track what has happened. And I think this is sometimes also covered as a part of their employment agreements or their internal, I would say, rules. So this is where maybe the forensic auditor actually gets the laptop, he gets the mobile phone. And based on that, I think nowadays with both these things, to a large extent, a lot of things can be clear whether certain things have really happened or not happened, in addition to all the other documentation, which is anyway a part of the process of the organization. So I think this is as far as the private sector thing is concerned. Now here also important, when you do a forensic audit assignment like this, finally what matters is what does the employer really want? Because most cases what the employers want is they would say, okay, they might get adequate evidence to prove that the employee has done something wrong. Now there the employer has got two options. One is to directly make the employee sit in front and say that we have found something like this. You have siphoned out or you have done a fraud of XYZ amount. You return the amount, resign today and get lost. That is what many organizations actually do. Other ways, sometimes organizations say that we will prosecute you and we will try and file a police complaint. We will anyway remove you and still file a police complaint and fight the case in a court of law. Now, as a forensic auditor in stage one, essentially you are only highlighting the commercial part of the transaction and trying to only prove how the particular employee has done something wrong. But in the second part, your evidence has to be something which has also needs to stand in court under the Indian Evidence Act to be able to prove, and in which point of time the person on the other side who is the employee is also going to employ a lawyer and who is also going to dispute on day one itself that everything that has been done is actually wrong as far as the employer is concerned. So I think when doing a forensic audit or while taking this assignment, it is also important that you understand from your client what does the client eventually want to do based on the forensic audit that you submit. The other type of forensic audit, I think, which is very obviously, which we all read about on a daily basis, is in case of these NPA cases where money lent by banks is not repaid by borrowers. So RBI makes it mandatory for most uh, assignments, especially above 50 crores, where there is an NPA, to undertake a forensic audit. Now, this is typically done by, I mean, over a period of time. So banks have been given that liberty. Indian Banks Association has this empanelment, and they do empanelment for firms which are less than 50 crores in terms of classification. Frauds less than 50 crores, frauds more than 50 crores. And typically then the whole appointments happen on a L1 basis even among CA firms. So I think that's like a different topic of discussion per se. But I think that is how the banking system in a way allots assignments to various CA firms to carry out these audits or forensic audits where typically loans are lent. Now, the big problem in case of these kind of situations is in most cases, you don't even get access to the books of accounts. And if you don't get access to the books of accounts of the borrower, because sometimes the borrower, there is nobody there, or sometimes they just refuse, they use lawyers, they use notices, they use any kind of thing to refuse it, though technically they cannot refuse it. At the same point of time, because they cannot refuse it, because they also don't want to be called a willful defaulter in terms of not giving access. So it's a very thin line that both, in a way, they try to tread. But at the same point of time, the big problem sometimes is about bank statement, because in these kind of assignments, the fundamental thing, like I said right at the beginning, from a forensic audit perspective, you are essentially trying to understand where the money has gone. So to understand that, you need to, for example, find out, uh, you need to get bank statements. And sometimes if it is a consortium lending, getting money from, getting even bank statements from the consortium members itself becomes difficult. Uh, Forget getting data about where is eventually the money has gone, because in a banking system, if you say that Sushrut Chitale has paid ABC, maybe X crore of rupees, so Sushrut Chitale forensic audit is being done. I mean, the forensic auditor will get the bank statements of Sushrut Chitale, but the forensic auditor cannot insist on the bank, and the correspondent bank, without a legal document or without some court judgment, or unless it is being done by a regulator or by the police, is not bound to even give the bank statements of XYZ. Now, if you don't have the bank statements of XYZ, you eventually cannot find out where the money has gone from there. So I think this is a practical difficulty in terms of finding the fund flow. At the same point of time, as far as the falsification of books are concerned, which is also one of the major other aspects which could be wrong. There again, if the access to the books of accounts and the supporting documents is not given, that can again act as an impediment. Ponzi schemes, again, I think these are typically covered in Maharashtra. There is a law called the MPID, Maharashtra Protection of Interest of Depositors, a very, very strong, powerful law. Most people who are actually, if you see in most of these cases where people take money and which is not repaid, if you see in more often than not, the arrests actually happen under that law and not really under any other law. But essentially, it is a law which is a very, very strong law, which has been enacted to protect depositors who give money essentially under collective investment schemes, which are called, or I mean, part of that are sometimes Ponzi schemes where only the money keeps on flowing around. So I think here in these cases, the appointment is typically done by the government of Maharashtra through the Anti-Corruption Bureau or through the Economic Offences wings of various police commissionerates. Here again, there is an empanelment system of the government of Maharashtra through which CA firms or forensic auditors are essentially empaneled, and those are in a way eligible to undertake these kind of assignments. Disproportionate asset cases, again, this pertain to public servants, politicians, and this is again an essential part under the Prevention of Corruption Act, where the disproportionate asset cases are thereafter looked at. And this is again assignments which are typically given by the Anti-Corruption Bureau or sometimes by the Central Bureau of Investigation. Terrorism related money trail cases, again, this is the domain of the National Investigation Agency. So that is again something which the NIA might give. Obviously, this is very, very specialized and this is very, very sensitive also in many cases. Then transaction audit under IBC. Now, technically, it is not exactly a forensic audit, but IBC, if you look at the sections, 3 sections of extortionate, undervalued, and preferential transactions in a way only cover 2 years prior to the date of the CIRP. But the fourth section, which is section 66, which is in a way covers fraud, there is no time limit for that. So I think sometimes under transaction audit, forensic audit for that, I mean, find out the impact of that section 66 itself becomes a major portion of the entire assignment. And which is again a very big area. Again, there is no empanelment per se which is required for this. This is again a great opportunity for people who want to practice as far as the forensic audit area is concerned, because under IBC there are a lot of companies which perennially are in that, and transaction audit is typically undertaken, wherein this becomes a good opportunity. Forensic due diligence, again, I think it's a mix of two things, but essentially over a period of time with many funds trying to invest into various companies in India, uh, maybe it's a mix of both due diligence, which is financial and tax, and also add certain elements of forensic to actually understand whether there is some background check done of the promoter, or to even do certain tests or procedures to ensure that things which are there are actually there or not. And so I think it is a mix of both a bit of forensic audit and a large portion of due diligence, which is mixed together and offered to maybe a investor who in a way invests in companies for their growth. All the things that I stated till now are essentially things which come into picture effectively. I mean, obviously not forensic due diligence, but everything other than that are in a way post facto. After a particular situation has happened is when a forensic auditor or somebody would come in and try to see if things are proper or not. In case of a fraud risk assessment, I think this is more of a preventive thing, where the auditor or some kind of a consultant or anyone who's a chartered accountant is appointed to identify what could go wrong and maybe build in controls before that to reduce the possibility of losses. So I think this is more of a internal, you can say, a internal controls assignment, or I mean, this is something which is more of a consulting assignment which is undertaken so that things don't go wrong. And I mean, this could also be mixed as a part of internal audit if you're doing it, so that it definitely would add value to the clients that you serve. Coming to what are the skills involved in forensic audit. So we discussed about what is forensic audit, what are the frauds, what are the different opportunities, but finally, how do you really do it, and which are the skills which are actually required in doing a forensic audit? One thing, if you have recognized till now, I have not purposely, and it is by purpose, I have not purposely kept on talking about technology, IT, technology, IT. Now, it doesn't mean it's not important, it's tremendously important. But I think finally, what is actually important as a chartered accountant is the logic part of it, because technology is something which you need to know and which you need to adequately apply to the situation at each point of time, because for each situation the approach could be a bit different. If you are doing a disproportionate asset case or a Ponzi scheme, you need technology to only understand where the money has gone from A to B. But if you are doing a disproportionate asset case, per se, what you really need to know is actually only how much money the person has earned and what is his exact net worth, or what is the total wealth that he or she has as of particular date. So for each kind of assignment, what you do with the technology is actually more important than the technology itself. I mean, it's like a car. Today we need to know how to drive a car. We don't need to really know how a car works. I mean, how a car exactly functions. How does the machine work? What is a combustion engine and everything of that, or what is a powertrain? So frankly, even as far as technology is concerned, what actually works at the back end of the technology is something which is, in my view, not that important, as long as you know what to do with those tools and where to really apply those tools. Because none of the tools, in my view, again, in the market are such that you just apply it and automatically you'll get a report. Nothing like that. You will not be able to use a tool unless you know what to get out of it. So I think that was just maybe a sort of qualification to use the word to say why I'm not been continuously talking about the word technology, IT in that sense. Fundamentally, in my view, the most important skills involved in forensic audit fundamentally is accounting knowledge. Because if you see, it is essentially, if somebody has to do a fraud, and we would say mostly it will happen through financial statements fraud, because that is where the major impact is going to be as far as the organization is concerned. Now, if it is going to be financial statement frauds, you need to know your accounting properly, because that is where you would know what has happened and what has not happened. So I think that is most important. Second is coming to various tools. So data analytics, which is Excel or which could be other specialized software, sometimes even Excel. Now with so many rows and with a good computer, with a good RAM, even Excel can actually give a lot of data. Sometimes nowadays banks, if you work with certain regulators, so if you work with the ED or a CBI, the ability to get bank statements is very good, and to get those bank statements in a proper format in terms of remitter bank account, beneficiary bank account, date, particulars is there. Otherwise, in certain cases, you will just get a bank statement in PDF which says that date, particulars, which is to clearing, by clearing, debit, credit, in which doing a financial statement or trying to, for example, find the source or the application or the beneficiary or remitter is next to impossible. But having said that, you definitely need to do data analytics. Now there are certain tools like IDEA is there, ACL is there, Intella, Encase, Tableau, and then for mobile analytics, if you really have that as a part of your assignments, sometimes you will have mobile imaging tools. But many cases I have seen it is not us. Essentially, it will be consultants or some of your IT teams within your office or we work with you who would help you in terms of doing that and helping you as far as that part of the assignment is concerned. Most importantly is to create and test a hypothesis. Now, why is this important? It's for the simple reason that you can't just be doing everything. So when you have an indication of something wrong in a particular company or in a particular situation, you need to think that what could go wrong there and try and go to the depth of it, other than just trying to find out each and everything across the company or across the organization. Because in most cases, you will also find evidence which is perfect. So that way you need to be able to know what is it that could have gone wrong, what is it that a fraudster would actually try and do. So create that hypothesis and try and test whether that is something which has happened. Naturally, if you have seen, a large part of what I said now or till now has been based on a good, I would say, convergence or intersection between what we know as chartered accountants and also with various other laws which are applicable to the particular organization. So having a good sound knowledge of various laws, and which of these I purposely kept stated here, is there banking laws. Obviously, if you are doing on behalf of banks, PMLA, if that is a thing that is going to be applicable, MPID, if you are going to work on any of the Ponzi schemes, that's an important thing, or SEBI's collective investment scheme regulations. Prevention of Corruption Act, if this is going to be applicable for any, I would say, disproportionate asset or in certain other kind of assignments, and certain case laws. I mean, case laws, I would always say there are two case laws that I really love. One was what was written by Abraham in the Sahara case, who was a SEBI, I think, officer who had written a judgment in the Sahara case, which makes the whole understanding around when to exactly go for a public issue and not. I think that's a wonderful case. And second is the Jayalalitha case, wherein how Jayalalitha was actually convicted while, like I said at the beginning, all the income tax gave a complete clean sheet, all the assets were taxpaid, but how it was found at the end by the Supreme Court that this is a case under the Prevention of Corruption Act, and how she was convicted of corruption. So I think these are two case laws which are very good to understand this intersection between various laws, and which will definitely be good in the entire understanding. Then understanding the business, I think it is, I mean, no point in reiterating again and again. But like in case of audit, if you don't understand the business, similarly in case of even doing a forensic audit, if you don't understand the business of that particular organization, you will never have a sense of what is actually material and what could really go wrong there. So I think understanding the business is imperative. And most importantly, common sense. Now, most difficult to define also, because like they say, common sense is not so common. But at the same point of time, having said all of this, I think we need to know that frauds are not committed by machines. Frauds are also committed by humans who might use technology, who might use machines to essentially move money or to do something for a particular purpose. So I think trying to look at things from a very, very common sense perspective, sometimes not looking at things from a chartered accountancy perspective, or forgetting that you are a chartered accountant while obviously retaining the skills thereof, but forgetting that you're a chartered accountant sometimes might be a much better idea, because then we are able to think very, very plainly and in a common sense manner. So I think that's something which is also a very important skill as far as forensic audit is concerned. So these are the skills, but what do you actually do when you do a forensic audit? So one is to understand the case background. That is, why are you there in the first place? So why has the situation reached a stage where a forensic audit is requested or is required. So knowing that is important, because why are you doing that in the first place? Now, in case of a bank, you can say, okay, RBI has mandated, that's why it's being done. But in other cases or in transaction audit, again, it's mostly a mandate by the RP, that's why you do it. But in most other cases, one needs to know exactly why are you actually doing a forensic audit? What is the background? What is the allegation? Where are you in the whole picture is something which is important. Like writing down the allegation. What is presumed to be wrong is important to find out, because like I said, a general analysis, a general forensic audit to generally find out what went wrong is very difficult, and it can be never ending. So that way, writing down the allegation and essentially trying to understand what has probably gone wrong is important. Understanding the end result expected by the client. So does the client effectively want to, like I said, only make sure to make the employee sit in front, put the employee in a dock and say, I have found out what you have done, you give the money back, resign and get lost? Or I don't wish to stop there, I want to actually go to a court of law and define things. I think that's something which becomes a good standpoint, because when you what is called as collect evidence, or collect facts, I think at that point of time, this ultimate objective is very important. And when you work for regulators, especially if you work for any police departments or CBI, NIA, ACB, EOW, naturally they are supposed to file a charge sheet at the end of it. So I think what you collect has to be something which is also evidence which can tomorrow stand in a court of law if the forensic audit report is going to be relied on as a I would say as an expert testimony or as an expert document. Basic understanding of the target entity or people, obviously, and reading all the relevant laws, rules, and processes. Because, like I said, each forensic audit is different, and accordingly, the particular company, the particular sector could be determined or could be driven by a certain set of laws, as well as there could be rules. In many cases, there could be internal processes. If you are doing a forensic audit on behalf of an organization to see if an employee has done a mischief, in which case, even the internal rules and processes will be as important. And like we discussed, again, creating an hypothesis, which is an ability to think like a fraudster. After you do all that, it is necessary to obtain all the necessary information. So which would involve understanding where the client location is, getting maybe email data backup, again, determining, or which is all determined by who appoints you and whether you have access to these kind of data, or mobile phones imaging. Like for example, in case of if you work on behalf of certain maybe stock exchanges to find out if certain brokers have done a mischief, they are duty bound to give this. But if you do it on behalf of a bank and ask the promoter to hand over a mobile, you will never get it. So I think that way, again, who appoints, what is the purpose, and what is the other legal things that come into play, to a large extent determine whether you can carry on certain procedures or not. After that, you actually test the hypothesis. So till now, you have collected the evidence, you have tried to collect, information. Based on that, you are trying to think that this is something that could go wrong. Based on which, what do? You do various analysis. You maybe mix certain analytical and substantive checks. You do a search on the words in the hard disk, mobile phones, emails, or in case of maybe nowadays mobile phones, essentially a WhatsApp summary. And if the WhatsApp is backed up, then you will, for example, get it forever. I mean, you can get everything if it is backed up on a Google on the cloud. And in that case, you can get the entire chat, which is there are softwares which in a way give it in a proper Excel format, who sent a message to what, whom on what day, and what did it contain. And then again, here the important thing is to have a, when we say focus over completeness, it is not important to just sort of complete everything. It is important to remain focused on what you wish to find out, because you are there to find out if there is a wrongdoing. So if you get a hint of something wrong somewhere, it is necessary to go into depth of that and try and find out. One interesting example, when I was working, one IPS officer had told me, it's an important thing, that in law, finally, when a government official, when a government, for example, regulator or a government agency tries to prosecute somebody under a charge sheet, it does not really matter whether the fraud or whatever is being charged is a loss or is a problem worth 1 lakh or 1 crore. So what is important is to do that end-to-end tracing, right? As far as one transaction is concerned, rather than do inadequate tracing for maybe 100 transactions. So I think from that perspective, that whole chain of command, which is a typical word that is typically used at, but it essentially means that whatever evidence is there has to stand in a court of law, and whatever evidence is handled, there has to be a chain of command of who collected it, who handed it over, who has it today, and till the time it reaches the court of law has to be appropriately maintained. Only then it is treated as evidence under the Indian Evidence Act. Like I said, substance over form, gathering evidence. So you gather what is again called evidence under the Indian Evidence Act. And lastly, what you write as far as report is concerned, because I think all this is good, but finally this needs to translate into a report which you actually present and which you write about in the and submit to your particular client. So what should a forensic audit report really look like? So I think what I've given here is maybe sample contents of a typical forensic audit report, which is a cover page, table of contents, introduction methodology, executive summary, detailed observations, conclusions, recommendations, and annexures. So I think this is just maybe a format, or which are only steps in a format which I've tried to do. There are various firms who write it in different manners, but this is what I think at least I do. And it is important that you very clearly also highlight what is the conclusion, especially in case of work which is done on behalf of banks, and what are the recommendations to the bank based on the forensic audit report that you have. One more important thing that I would always like to say is that a forensic audit reports, I mean, the whole concept of forensic audit sometimes looks too, I would say, fascinating, or it is too, so it sometimes is very fascinating. It is very nice to look at it when you read newspaper reports. Oh, this is what so and so money, this has worked, and that has happened. But see, writing a forensic audit report is fundamentally very different than writing a newspaper report, because the person who writes the newspaper report is effectively accountable for nothing. But when you write a forensic audit report, how you write a report will actually make a big difference on what the investigating officer, in many cases, depending on who is appointing you, could do about it. Like for example, I have known of at least 3 cases where in 2 of those, chartered accountants have gone to jail purely because of the way in which the forensic audit report was written. And because of the way in which the forensic audit was so, it used so many general terms and gave a sense of such a scandalous way in which it was written, that the investigating officer had frankly no option but to put maybe those people behind bars. And frankly, the next day, the court in a way immediately gave them bail, because it was never going to be the case. But the investigating officer in a way stated that the way in which the forensic audit report is written, if I would have not arrested them, then a departmental proceeding would have started against me. So I think that way it is important, and we have to be very careful about how we write a forensic audit report, because eventually uh, it can affect a lot of people just beyond the evidence that we are writing. Secondly, we should not really get too personally attached to the contents of the report. We need to understand that we are appointed for a particular purpose to get a particular facts onto the table. It is not our job to go and prosecute the people contained or who are about whom we are writing. That's for the job for maybe somebody else. It is for the job for the prosecuting agency as well as the court to decide if somebody is right or wrong. We are not people who can decide whether something is right or wrong. We are effectively bringing on facts to the table. Now, while doing an assignment, sometimes commercially as well as legally, we might understand कि ये ऐसे हुआ है. But our job is to bring facts to the table, and to that extent, we cannot be attached to the situation beyond the point of time. Certain things as far as evidence is concerned, I think what and which like I said, sometimes as chartered accountants, we also tend to see things, something which are obvious, but from a legal perspective, they might not be obvious. So let me give an example. Say for example, I'm Sushrut Chitale. So in a particular company, I find, okay, there is a person, money is paid to Sushrut Chitale, and then you see the ROC records or you see the details of the company. There is a Chitale who is a director. So immediately we say, iska beta hai, ho gaya. But in court, we have to prove how Sushrut Chitale is actually the son of Mukund Chitale. So I think from a basic things, even from an evidence angle, when it goes to a court, something which we look at or which we feel is commercially obvious is never obvious in a court, and accordingly, each of these things need to be put together painstakingly so that it can actually be treated as evidence when it goes and it stands in a court of law. So these are, I would say, things which we have covered till now about what is a fraud, what is a forensic audit, how do you actually do a forensic audit, and which are the main skill sets and how do you write a report. What we will try and cover in the next 5 to 10 minutes is certain case studies or certain types of things which maybe I have come across till date, just to give a sense of what could really happen and how you really go about things. So there was an assignment on behalf of a bank where we found that there is a A Limited who is a borrower, which has accounted as an advance to a vendor of 60 crores and given the amount to B, which is again an undisclosed related party. So this was a related party, but which were not disclosed as such in the books to accounts. This 60 crores was paid by B to C, which is again another undisclosed related party, which went to D, which is again a disclosed related party. And on the same amount was again it came back into A Limited as unsecured loan from promoters. Now, this entire transaction had happened on one day. And the purpose of this was because there was a requirement from the lenders that this particular company should bring in money in the form of promoter funding before. So naturally, this was some 20 or 30% of the total amount sanctioned, and the rest of the money was supposed to be given by the lenders. So this was a transaction which essentially happened on the same day where this entire routing had happened. And accordingly, based on it, they got another funding of maybe 3 or 4 times this amount from the banks, which was essentially later on siphoned out. Similarly, in another case, there was a Limited where products were sold to certain related parties, and there were other related parties where the same amounts were essentially purchased. And this knocking off had happened wherein the debtors in the books were knocked off against the creditors sitting in the books. That is where the purchase of products from one related party was not in operation. This was again done to disclose certain higher turnover in the financial statements. And to keep on, this was done over a period of time where the debtors, creditors obviously both increased, but due to the profit margin, the difference between the two kept on increasing, and accordingly the company was able to draw a very, very high level of have a higher drawing power and was able to maintain its limits. Then there were certain cases where in case of maybe an A Limited, there were monies which were transferred under LC under fake purchases. So there was no purchase per se, but this amount was essentially transferred by A Limited to B Limited, which was an undisclosed and non-operating related party. There was no purchases in the books of accounts at all, and accordingly this money was essentially transferred, was effectively moved. Now, one important thing which is very common sense, but which is always important to look at, even while frankly doing the statutory audit, is the operations of the company, or are the payments being made to people or to parties which seem to be related to the nature of business of the company. Like in one of the cases, what we found was the company was into electronic components and they were purchasing rice. Now, legally, what they said, or when we asked the bank, frankly, because this was more the assignment when it came to the bank, we asked the bank that if they are in electronic components, how did you sanction and how did you clear a LC which pertained to purchase of rice? So they said ki, no, but that if you see the memorandum of association that covers agriculture commodities. So, I mean, this was a ridiculous explanation because most MOAs can cover everything. But I think that way, both banks as well as we, when doing forensic audit or even statutory audit, have to be careful about what is the nature of business of the company and which are the kind of parties that they are dealing with, whether they are also in a similar type of business. So I think in this case, effectively the money went out and it got siphoned, and that point of time, the non-funded facilities got devolved, became funded, NPA, and the money was lost. Similarly, A Limited selling at 2,000 rupees per unit to B Limited, and the same product was within a month being purchased from B Limited at 3,000 rupees. Now, this was again typically being done 2 years before the CIRP was in place. So I think this attracted the relevant provisions of the IBC, and effectively it was siphoning out of funds from A Limited, which was going to be under IBC, which the promoters knew would go under some kind of insolvency within 2 years. And accordingly, whatever were the funds were being siphoned out and were being driven to a related party. And there was no assets or liabilities. It was just a plain business transaction, but effectively the money was being moved out. One interesting case that we came across, and this again, we could in a way look at this, or we could do this, is because this was being done by a regulator or on behalf of an investigating agency. Now, when you do an assignment on behalf of an investigating agency, the advantage, like I said before, is that you can go to any extent in terms of getting the relevant data. Because if for example, a EOW, ACB, CBI, NIA, or ED, if they ask for the information, most banks are forced to give that information. Whereas if you're doing an assignment on behalf of a bank, like I said, if the movement has happened from A Limited, on whom you're doing a forensic audit, if the movement has happened to B, most cases, even the bankers of B will never give the bank statements of B Limited for the purpose of doing a forensic audit of A Limited. But when you're appointing agency is a government agency, essentially a police or a investigative agency, in which case they have powers to get these bank statements. So here what we found was, and this was obviously, it was done recently, but it pertained to a case which was prior to 2014. And where there was a Limited and B Limited, C Limited and D Limited, they had investments which were made in equity shares. And this was the typical pre-2014 case, wherein before the change in the Income Tax Act, these investments had happened at a tremendous premium to the book value as far as the shares are concerned. Then in these B, C and D Limited, there was a EF, which was a partnership firm, which was making some kind of business payments. In that particular partnership firm, there were these proprietorships, G, H and I, which were again making some business payments. And then within each of these proprietorships, there were all these different proprietorship funds, which were again making payments into these three layer 2 of proprietorship funds. And in this layer 1, cash was being deposited. Now, what was happening is all of the cash was typically getting deposited. So for example, J, K, L and all these proprietorship firms were incorporated with a KYC. They were proprietorships, so they had a KYC at the time of opening, typically opened around May of a particular year. All deposits were less than 5 lakhs at that point of time, because that was the limit as far as CTR was concerned under PMLA or reporting to the FIU. Once this investment or this cash was deposited, immediately on the next day, it used to go to layer 2 through a bank transfer. So a lot of cash was deposited over a period of time. By February of the next year, the bank account was closed. So at the beginning of the year, no bank account. At the end of the year, no bank account. At that point of time, there was a KYC. Sometimes even a PAN was taken. But because there was no entity only at the end of the year, there was no return filed. And the amount, or sometimes even the person was traceable, KYC whose person was there. But those people were some who were, I mean, we can imagine that those are people who had no clue about what was really happening using their KYC. And that is how a large chunk of money, and if you see serially numbered checks were being used to move funds from layer 1 to layer 2. And I mean, effectively, there was no other business in these layers. So I think this was a very, very structured way at that point of time. Interestingly, all of these also happen to be in the same bank, or in at least in different branches, but all of these in the layer 1 had a common bank in a common city, and it was effectively being moved this. Now, frankly, this was a very clear case of money laundering, where there was placement, there was layering, and then there was finally integration. Now, like I said at the beginning, all of this, obviously the allegation was somewhere else, and I think later on it was the investigating authority which tried to connect who deposited the cash and who received the cash from whom. So I think that is something which was the part which they covered. But we were able to do all this because of the data and information which was available, because we were working on behalf of an investigative agency. At the same point of time, interestingly, all the money which came into A Limited was appropriately treated by the Income Tax Act. Proper income tax was paid by all the entities that are shown, especially layer 3, layer 4, layer 5. And that is where I would say that even though it was completely tax paid money, it was for the court to decide and whether it is actually proceeds of the crime or not. So I think that is where we also need to understand how we typically differentiate between maybe tax paid money versus money which is actually laundered. So I think as far as case studies in Ponzi schemes are concerned, typical modus operandi of a Ponzi scheme would be where customer would invest in a scheme, uh, and a typical Ponzi scheme where we'll say, okay, I'm taking money from you, and I will give you maybe 30-40% return in a year. So per month I'll start paying you 4% back. So the way in which it would work is that maybe customers would invest money in the scheme, and then out of that I would immediately pay certain commission to my agents, because it is only the agents who really drive this whole thing. And then these agents tend to, because the agents get their commission, they sort of reinvest back into the Ponzi scheme, and some of the initial money is actually used to build confidence to pay it back to the customers, because the customers actually start saying, at least the initial customers start saying that I invested 100 rupees and I actually got maybe 20-30 rupees in the first year. Then that's why he invests not 100 in the second year. The customer ends up investing the entire amount in the next year. And that is how by word of mouth it spreads till the time it reaches a particular mass. And then the money is actually siphoned and invested in various group companies, organizations. And I would say what can say, the ironical or the sad part of it is then the customer's money itself is used by the company to fight cases right up to the Supreme Court against the same customer. So I think it is the scheme or the thing which is in a way the promoters or the of the particular scheme. In many cases, it's a company, which is then that is how the system really works. So I think these are various types of forensic audits or case studies, which maybe we could, and there is no end to it, because like I said, every fraud is different and everyone will have different set of experiences. But over a period of time, I feel that there are certain red flags which one needs to really look at when while doing a forensic audit, or for that moment, while in fact doing a statutory audit also, identify if there is a possibility of a fraud. Now, let me tell you that not all of these or none of these frankly mean that there is going to be a fraud, but these point to a possibility that one needs to look into more detail as far as these aspects are concerned. So one is there is a beyond industry performance when the rest of the industry has suffered a slowdown. Now, why should that really happen? Will rarely be a company which will fit into this category. If it fits, it has to have a very clear logical reason why that has happened. Second, which is a very common sense thing which I think one should always do, is to see to compare the profit before tax with the operating cash flow over a period of time. So in a particular year, it is possible that the operating tax profit before tax is a high amount, but there is a negative cash flow. But consistently, if you see that there is a deviation, and there is a big deviation between the reported profits versus the operating cash flow, then that means you need to look into more detail to understand why is the case. Because what it means is that effectively from a cash flow perspective, you're losing money, but your profits seem to be very high. Now that can happen only if you're tweaking something as far as the working capital or certain other points are concerned. Only then that is something that can really happen. Very high level of transactions with related parties. Naturally, by itself, it doesn't mean that anything is wrong. But why should you as a business have, as a business, very high transactions with related parties? That means the purpose of the business per se seems to be to sort of help some other related party carry on its business in a big way. Then transactions with related parties or with parties which do not appear to be related to the nature of business, like the example that I gave, that if you are into electronics components trading or manufacturing, why should you be purchasing agricultural commodities? Why should your parties or vendors or suppliers be somebody who have got nothing to do with your business? So I think that's always a clear indication that something could be happening behind the scene. High level of bad debts and write-offs. I mean, essentially what it means is that there are very high revenues in 1 year, huge fluctuation of revenues coupled with a high level of bad debts and write-offs, because that means that there could be a something which is an issue at a policy level in terms of trying to manipulate earnings. Knocking off debtors against different creditors. I think this is a very obvious step which one has to do, which is also always done, especially with respect to even IPC, because this can directly point to what is called as preferential transactions. So one has to be very careful. And I mean, as accountants, we can directly look at it. If you're using any kind of tool, I think it is very easy to find out if something like this is happening. One interesting thing which I always feel, I have seen certain companies where everything is impeccable. I mean, there is no interest on TDS. Even the advance tax is paid in such a way that there is no interest on delayed or less payment of advance. So there is no 234 ABC also, and it is done in such a way that there is very little refund also. So, I mean, I always wonder that what kind of company can there be? I mean, there could be a very, very well-run companies can be there, but otherwise, where you are doing a forensic audit, how could there be a situation that so everything is so perfect that there is no interest on advance tax, or there is no interest, there is everything in TDS is perfectly paid, and still there is no perfect, maybe 1000 rupees, 1500, 5000, itna hi refund at the end of the year. So I think when so much if is possible, one of the obvious things that comes to mind is that means that even the profits which have to be disclosed at the end of the year are known at the beginning of the year. So I think that is also one of the indicators, I would say. It doesn't mean by itself that it's a problem, but you definitely need to look at that in more detail. Frequent changes in accounting and compliance related staff. Again, I think quite obvious that if your CFO seems to be resigning every year, then, or if you keep on changing the auditors every year, that also to me is a very clear indicator that that means that there is some kind of a friction between the auditors and the management, or you don't want the auditors to really know anything beyond the point. So I think both these things are equally important. And lastly, which is I think very obvious, that promoter lifestyle does not seem to be in sync with the financial performance of business. One of the earlier CVCs that who had said that there are always poor industries but never poor industrialists. So I think that way we need to be very clear and we need to understand what is it the financial performance of the business, and broadly from a promoter lifestyle perspective, how, if there are no other businesses, how is this possible? So I think again, when we are doing forensic audit is important, but I was thinking about it last night, I realized this is as much important when we do statutory audit, because even in statutory audit now we have a responsibility to also look at fraud risk in a limited manner, but identify and maybe even highlight frauds and report it. So I think we need to be also aware from that perspective about this particular set of items. So I think that was frankly from my perspective about the presentation, and would be happy to hear your views, or maybe would be happy to sort of answer any questions if there are. Over to you, Rishabh.
Yes, there are certain questions that have been asked. I'm just going to share this for you. Can you see my screen, sir?
Yeah.
So look, you can go ahead with the queries, please.
So what skills and tools are needed for effective forensic audit of companies? I think I have sort of tried to cover it in terms of the skills that are needed. As far as tools are concerned, I think both, I mean, fundamentally from a knowledge perspective, knowledge of laws, accounting knowledge, and from a technology perspective, I have tried to give some tools. Now, these are tools which are typically used by chartered accountant, because see, I have not gone too much into tools which IT people would use for data imaging and mobile phone imaging, because typically what will happen is there are people with different skill sets who would come with their machines, or who would come with the relevant, I would say, softwares, and they would analyze that and maybe give us what is required. But maybe IDEA, ACL, and certain other tools I have tried to give in the presentation, which I'll also share with you at the end of this session. The second is what kind of software should we use? Again, like I said, it depends on the situation. I don't think there is any software, at least to my knowledge, where you will put data and you will get a report that you want. See, it's like finally, it's like the whole concept of garbage in, garbage out. So what you want to do with the data, unless you are able to clearly define that, there is no software which can just throw results that you feel you want. So I think softwares are important, and that again, I think in a way indirectly covers the first point that I said. With increased use of digital payments, where making and vouching of trail is need of day. So isn't it that such forensic audit is required by each and every auditor, let it be statutory or internal? Definitely, point taken. With the increased digital payments, it is necessary to identify where money is coming from and where money is going. And I think there are certain, like I said at the end also, that there are some of these procedures or some of these processes are definitely important for both statutory as well as forensic auditors. I think fundamentally, if you look at the whole process of auditing, what has really digital payments, or what has the whole concept really changed is that our entire audit is based on the premise of you cannot check everything. I think that is where sample based auditing really came into the picture, or auditing standards are based on that. Now we have tools wherein we might be able to check everything. So maybe that will also change the way, in a longer term, I'm saying, about how we really undo statutory audit. And secondly, with the preponderance of so many tools and IT systems, the concept of continuous auditing would also come into the place, because right now we are saying, okay, because it is too much, we will do on sample basis, we'll do it once in a year. But maybe the concept of continuous and complete auditing at some point of time would also come into the place, at least in certain industries. And forensic auditing tools, or I would say skill sets, are definitely becoming important, because if you see the common perception of society, I mean, this is in a way I'm trying to maybe deviate a bit, but if you understand, or if you talk to maybe, and I always say that if you talk to a complete layman, and who is a layman who doesn't know what auditing standards are, accounting standards are, if you talk to a common person like that and say, what do you think does an auditor does? In 9 out of 10 cases, you will get an answer that an auditor ensures that there is no fraud. Because that is what the society's perception about us as auditors is. So I think at some point of time, we would need to maybe, I mean, still Institute has been resisting that, still the time is yet to come. But over a period, maybe we will need to sort of incorporate some forensic auditing techniques as a part of statutory audit also, to give that adequate comfort to the readers, which is a society at large, about what we do even when we do statutory audit. In banks also, we should have provision for incurred but not reported fraud. NPA similar to insurance companies. Okay, fair enough. I think this is a very specific thing, so we'll not go into it at this stage. But in cases of off-balance sheet transactions where focus is on propriety and impact needed, how it could be possible where SOPs are not defined in smaller or medium-sized organizations? Completely agree with you. I think here the entire focus will be driven by who is appointing you and what is the nature of allegation. When I say propriety and impact, it would probably mean that whether there was an amount which was required to be paid for the purpose of the business, and still if the purpose was not suitable, whether then particular amount was being paid, I think propriety would be from that aspect. So in case of a bank where you're doing a forensic audit, what would be important is to find out is whether this kind of a payment was what the bank was known would be doing, and which was known to the bank that this will be the place where the money will be deployed, and still whether essentially it has gone to some place which will not be for the furtherance of the business. Sixth is there any role of ethical hackers in fraud investigation where laptops, mobile phones, data files are not available? It is permitted by regulators like EOW, and your view on that? Should investigators go in that way? Definitely. Like I said, see, what happens is if you are doing a forensic audit on behalf of a bank, many a times you will not even get any of this access. Sometimes you don't, like I said, you don't even get access to the books of accounts. Forget where are you going to get access to the laptops which contain the books of accounts. And then getting an access to the promoters' mobiles is the out of question, because the first thing that he will do is to file a court case against the bank itself saying, how can you ask for that? So I think this is something which will evolve. But in many other cases where, like, if you do these forensic audits on behalf of maybe certain other regulators, the other regulators, if you do it on behalf of SEBI or certain stock exchanges, then the brokers definitely have to provide this. And accordingly, I think it is possible that a lot more things are definitely found out. Ethical hackers, yes, but ethical hackers, like I said, I mean, this is a topic where going forward, even ethical hackers would need access to the server to find out what has happened. I mean, be it an ethical hacker or some kind of a forensic IT expert would need access to the data file or the access to the server to know what has happened. Without that access, I don't know what they will be able to do. Are we prohibited from resorting to sample-based testing under forensic? No, see, there is no prohibition at all. I mean, see, what I tried to say was that in forensic, your idea is to find out what has gone wrong. So whatever helps you do that is fine. But your report has to say that, okay, X gave money to Y on so and so date, this bank account to this bank account. And then from that, money moved from X, from Y to Z, from so and so bank account to so and so bank account on so and so date, which is not backed by any business transaction. So with that level of thing, if you are able to do, I think that is fine. So I think sample based or complete substantive is really your choice. But at the end of the day, you need to collect adequate facts and evidence to be able to prove to your client that you have done your job properly. I think
all the queries have been answered. Jayant, over to you.
I think so. There are no other queries.
Okay. No. There are a couple of other questions. I am going to put it over. So give me a minute, please. Yeah, I think you can see those questions. I think that's a single question. And then there are questions that are coming up. So I'm going to keep posting it. Would love you to answer all those questions as well.
yeah, I mean, how many as in I don't quickly remember the number of forensic audit standards. But I mean, Institute has come out with forensic audit standards which cover the conceptual aspects, which cover the definitions, and which also cover the process of undertaking of. And like I said, what is called by the Institute is a forensic accounting and investigation standard. So while undertaking forensic accounting and investigations, those standards are covered. Do we need standards? Yes, at some point of time, definitely, because at least I look at standards as a loose shirt. It should cover the subject matter, but at the same point of time, it should also give space for movement. And I think standards will definitely help the fraternity, because at some point of time in future, what is the test whether a particular person, that is a forensic auditor, has done the job properly or not? Today, there is nothing. Today, it is only, I mean, very lightly or loosely speaking, the biggest risk which I have as a forensic auditor is that there should not be somebody after me who finds out more than what I have found out. So I think very loosely that is the only thing. But tomorrow, what is there in terms of the standards are definitely going to help us in terms of trying to prove to a regulator or to a client or to the other regulators per se that we have carried out our work in a particular manner, and that is why this is a proper way of doing things. I think we definitely need standards. How to get forensic audit if IBA on panel? How to approach bank? Oh, okay. So I think, I mean, I don't know how to approach banks, but typically banks reach out. And I think this is again a big challenge because banks typically go on the basis of only L1. And I think there collectively as chartered accountants, we need to really sort of be careful in terms of what is the fees that we quote, because sometimes the fees that are quoted by us within the fraternity itself are so low that many people actually wonder how is a forensic audit going to be done at this cost. So I think first is more and more firms should get empaneled on the IBA. And on top of that, I think collectively we need to ensure that we don't really resort to undercutting. Whether report should be very specific, either there is a fraud or there is no fraud. I think excellent question, and that is where it is very difficult because from an IBA perspective, what the whole problem started because Indian Banks Association issued a circular which says that banks should accept a forensic audit report if it is only conclusive. Now the biggest problem in a forensic audit is banks say whether it's a fraud or not. Now actually who defines whether it is a fraud or not? It is a court which is going to define. In an Indian context, an expert cannot define. I mean, a forensic auditor, in my view, it's a very dangerous legal thing for a forensic auditor to start defining whether there is an actual fraud or not, because you are passing a judgment. Now, the power to pass a judgment is actually with the court of law. And accordingly, that is where this challenge is. And on a daily basis, when reports are issued to banks, this is definitely a challenge in terms of trying to fight with each bank on each report, whether what is the wording and how best, frankly, we can cover or we can, I would say, protect our interests. And at the same point of time, the bank is also in a good position based on the report to take a further course of action. Whether report has institute taken any action against any CA based on the frauds as recorded in the banks. Yeah, I'm sure institute, because there is now a very strong mechanism by which even banks also tend to pass this relevant information to the ICAI, and I'm sure ICAI through its disciplinary committees and through the entire mechanism is adequately seized off of the matter.
Again, there are questions that are coming up. I think the last for the day. I'm just going to put this to you. Yeah.
Yeah. My personal opinion is definitely yes, because if you see or read the IBC, it is, I mean, and again, I am not a resolution professional, I am not an expert, but based on my experience, I would say it is the job of the resolution professional to come to a conclusion about all the 4 sections. So it is, I mean, it is very much possible that a RP can completely go against the conclusion. Now, obviously, it will depend on the facts and circumstances of the case, because if the forensic auditor is so clearly say that if something is wrong or if something is clearly right, on what basis the RP can override it is a different thing. But my personal view is that as far as the IBC is concerned, the responsibility of classifying it rests with the RP, and for that purpose the RP appoints an expert, which is a forensic auditor. So logically there should not be a difference. But again, like to reiterate, the responsibility in my view lies with the resolution professional to determine the classification as far as preferential, undervalued, extortionate, and fraudulent is concerned. But again, I think this is a legal view. So, I mean, there can be 2 views on this.
Thank you, sir, for answering all of the queries. There were a lot of them. There are a lot more queries that are coming up. But I'd like to now put it forward to Jayesh Thakkar. Jayesh sir is coming in Google. In the meantime, Rahul, do you want to ask anything to Sushrut sir?
Okay. We would formally, I would like to give a vote of thanks to our today's speaker, Sushrut sir, who has given us a good insight on how practically we can go about a forensic audit and in-depth knowledge about what actually the forensic audit is. It was an excellent presentation, sir, and thank you for sharing your in-depth knowledge with us. I formally give you a round of applause and a vote, formally give you a vote of thanks for this wonderful session. With this, we can close the session, sir.
Thank you, everyone. Thank you so much.
Thank you, everyone.